this video, you're going to learn all about the wealth crossover indicator and how it works. But before we get started, we're going to ask you to first do something which is absolutely essential if you really want to get the most out of this video and out of the wealth crossover. In fact, if you want to get the most out of FoxEx as a whole, the following is a very good place to start. We're going to ask that for the duration of this video, you please put aside everything that you have ever been taught or learned on the subject of trading. Trends, moving averages, oscillators, support and resistance lines, trend lines, dynamic movement of price, retracements, Fibonacci's, news events, fundamentals, technicals, the entire job lot. Just for a few minutes, push the pause button on all of your trading stuff. And if you happen to be one of the handful of fortunate traders who don't really have much stuff, then that's even better. There are two reasons that we ask you to do this. The first reason is that the wealth crossover indicator requires you to look at the charts with a very simple and unbiased perspective, just as you did when you first started trading. The second reason is that at FoxEx we firmly believe that the majority of lines and indicators are unnecessary and more often than not serve as little more than a distraction. In many cases, we have learned that excessive noise on the charts is one of the fundamental causes of inconsistency, inefficiency and confusion as a trader. Okay, so let's get started. We're going to begin by just pulling up some random live charts. Any chart will do. For now, we'll be staying on the daily time frames. So here we are currently looking at the GBP JPY on the daily time frame, and as you can clearly see, this chart has been doing what all charts always do all of the time. It has moved up and then it has moved down. Then it's moved up again, and then it's moved down again, and then up again and down again, and so on and so forth. As you know by now, there are literally hundreds of different names for these movements, but for the sake of absolute simplicity, let's just agree that sometimes the markets move up and sometimes the markets move down. The truth of the matter is that this is all the charts ever do, and the entire subject of trading is little more than an interpretation of these two fundamental types of movement, to the upside and to the downside. Let's now pull up another live chart. This is the chart for gold, and again we're on the daily time frame, and again the market has moved up and then moved down over a series of these large swings shown here. Let's look at one more chart. Here we're looking at the dollar yen, and it's the same stuff over and over again. You can pick any chart, and one thing that we can all agree on is that sometimes price moves up and sometimes price moves down. Now what we're doing here may seem quite elementary and somewhat boring to some of you, but there is a very important point to this exercise, so please bear with us, because we're about to share some information with you which will most likely be of great benefit not only to you, but more importantly to your trading results. Now please note that these charts shown here have not been cherry-picked or selected for some special purpose. All charts do the same thing, and these charts shown here are very indicative of the general market movement which takes place on all symbols day in and day out. The only difference in any chart is the length of time that price moves and the amount that price moves, either in the upwards or the downwards direction. That is all. There is absolutely no need whatsoever to complicate trading or the financial markets any further than this. A second universal characteristic of all charts is this. For the most part, all charts are pretty much all over the place. A handful of traders may find a thin slice of predictability amongst the randomness and the chaos of the markets, but the simple truth is that this is a very tough job because the markets are constantly moving and constantly evolving. The only thing that consistently happens in all markets, which is something that we can all agree upon, is simply that sometimes the markets move up and sometimes they move down. This is a universal law of the financial markets, and to make any further universal conclusions would inevitably be inaccurate, because all of the up and down movement on the charts is subject to individual interpretation. This is just how it is in trading. A third and final fundamental characteristic which we would like to make you aware of is that the singular quest of every single trader is very simply to know or to make an informed decision about what will happen next. No matter how long you have been trading, and regardless of how successful you have been or not been, the all-important question for any trader is always this: can you, and really be honest with yourself here, can you navigate your way through this up and down movement and consistently extract money from the financial markets by identifying these swing points or these turning points and either buying or selling at the appropriate price or the appropriate time? If the answer to this question is an honest yes, then a big congratulations is in order to you, because you are one of the tiny minority of traders who really know how to succeed in the markets. If the answer to this question is anything less than a resounding yes, then you are a part of the overwhelming majority, and simply put, the systems and the strategies that you are currently using to enter and exit the markets are not working as well as you would probably like, and in some cases they are unfortunately not working at all. To quickly recap then, so far we have established that the charts simply move up and down in a never-ending dance, and the singular intention of all traders is to consistently identify what will happen next and enter or exit the market accordingly. Now let's bring this all back to the wealth crossover and explain why this indicator is so powerful. It is designed to pinpoint these turning points in the market so that you, the trader, can either buy or sell at the appropriate time and at the appropriate price. This is all the wealth crossover does, nothing more and nothing less. If we can consistently forecast these turning points in the markets, then all of a sudden the entire process of trading becomes very simple and very straightforward. We simply buy here and sell here, and buy here and sell here, and so on and so forth. As a trader, when you boil the entire subject right down to the bare bones, this is all you're really looking to do. Now that we've decluttered the entire subject of trading, let's next put the wealth crossover onto a chart and explain what it is and how it works. First of all, please note that these three innocent looking lines are not moving averages. In fact, they are unlike anything else that you will find on any retail trading platform anywhere else. These three lines are actually the result of over 4 decades of research by the FoxEx co-founder and Director of Financial Engineering, Professor Shepard. You can read all about the professor on the FoxEx website, and you can find out what he's currently up to on the FoxEx trading floor. Just for the record, some of the mathematics and the science behind these innocent looking lines looks something like this. Fortunately, there is absolutely no need whatsoever to understand or learn any of this information. At FoxEx, we call these three lines the wealth crossover, and in addition to a little bit of sensible and simple trade management, this indicator may well be the only trading tool that you will ever need in order to thrive abundantly as a trader. Here's how it works. Notice that for the most part, the wealth crossover lines pass straight through the center of price, and every now and again they cross over, such as here, 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 and so on. For now, let's focus on the blue line and the purple line. Select the line tool here in the FoxEx trading platform. Simply drop the line anywhere on the charts, and from here we can drag the line anywhere we would like to. Next, identify the highest or the lowest point between any two crossover points of the blue and purple lines. As you can see, the highest point between these two crossovers shown here, this point shown here. Simply place the end of the line tool on this point, then drag the line downwards so that the midpoint of the line shown here sits exactly on top of the crossover point between the blue and purple lines shown here. Let's take another line now and repeat the process. The lowest point between this crossover here and this crossover here was this point shown here. Drop the line on this point, and then once again we're going to drag the line upwards so that the center point sits on the crossover between the blue and purple lines shown here. As you can see on this gold chart, we have now drawn a line between each swing in the market, always ensuring that the midpoint of each line sits directly on top of the crossover point between the purple and the blue lines. For those of you who haven't noticed yet, the lines which we have drawn through these crossover points are very effective and very consistent estimates of these major turning points on the chart. Now this is all well and good, but of course we've marked these lines in hindsight, and they are therefore of no real use to us since all the money is made over here on the right hand side of the chart. The only benefit of this hindsight trading or back testing is simply to confirm how well the indicator has performed in the past. As you can clearly see in these examples, the wealth crossover is incredibly consistent at forecasting these major turning points in the market. At this point, before we go any further, let's take a few seconds here to set the record perfectly straight. Is the wealth crossover a perfect system? The answer to this question is no, it isn't. Anyone who has spent any time trading the financial markets whatsoever will fully understand that consistent perfection simply doesn't exist in trading. However, the wealth crossover is consistently effective at forecasting turning points in the markets, and as you already know, that alone, coupled with some sensible trade management, is all you will ever need to do very, very well as a trader. So let's move on now and see how we can leverage the power of the wealth crossover over here where it matters most on the right hand side of the chart. Again, we're going to grab the line tool and repeat the process over here on the right where the current market activity is taking place. Notice that the lowest point between this crossover here and this one here will be the bottom of this bar here. So again, we grab the line tool and we drag it from the bottom of that bar and ensure that the midpoint of the line sits on the crossover, and there we have an estimate in both time and price of where price is most likely to go. As you can see in this example, price has already reached the level as indicated by the wealth crossover, so this would be a great example to just back off and wait to see what activity unfolds in the next few days on this particular symbol. In this example, we're looking at the GBP USD, and as you can see, the wealth crossover indicator is showing that there still is a strong probability of price moving to the upside despite the last 2 days having some movement to the downside. So in this case, this would be a good opportunity to manage the trade, get the stop loss moved up a little bit, lock in some profits, but still keep your options open because we are expecting some more movement to the upside here on the GBP USD. Summing up then, the entire object is simply this. We enter trades either at the top or the bottom of the swing as indicated by the wealth crossover. Then we exit the trade once price reaches the other end of the trend line. We then enter the trade again and we ride it back the other way until the other end of the line, and so on and so forth. Rinse and repeat. Of course, it will be necessary to manage open trades and protect your capital as you normally would. However, there is absolutely no need whatsoever to waste your time overanalyzing the markets as price moves from one major swing to another. The wealth crossover eliminates the need to engage in this kind of activity. Can you catch every single pip on each individual swing? Highly unlikely. Do you need to? Absolutely not. Even if you can catch the middle third of each swing and manage your trades very conservatively, this would be more than enough to succeed. This really is trading simplified. There is absolutely no need for fancy trading toys or dozens of lines and flashing lights on your charts. Furthermore, there is no need for hours of analysis or years of research. Why complicate things? The wealth crossover indicator is an extremely powerful piece of financial engineering, and when used correctly, this really is the only trading tool that you will ever need to consistently extract money from the financial markets. The only additional tool that you will require is some consistent and very simple and straightforward trade management skills, which can be learned by almost anyone. So if you want to simplify your trading routine and get completely rid of the unnecessary clutter on your charts, come over to FoxEx and see the wealth crossover in action for yourself. This has been an introduction to the wealth crossover from FoxEx.